Hello and welcome to the Morningstar series Ask the Expert. I'm Emma Wall and I'm joined today by Morningstar fund analyst Daniel Vaughan. Hi Daniel.
Hello.
So we're here today to talk about UK smaller companies. There are a number of really interesting players in this sector, but we're going to highlight three that you, as Morningstar analysts, like today. What's the first fund?
I think we'll talk about the Old Mutual UK Smaller Companies Fund first of all. It's one of the bigger funds in the sector, high-profile fund, well-known manager. As I've said before, Old Mutual is one of the groups that we like, based on the way they hold on to their employees and incentivise well. Dan Nichols has been there since 2001. He's run this fund for over 10 years, so he's a long-standing UK small-cap manager. And has proved himself to be a pretty capable manager over the years. He's actually very well supported. Heads a team of 6 covering small and mid cap, so one of the best resource teams that we cover. And his approach has been pretty consistent over the time he's run the fund. He is fairly flexible, but pragmatic. It's unusual in that it's got a top-down element to it as well as a bottom-up. A lot of small cap managers don't have that kind of top-down macro overlay. He can draw on the highly regarded UK team headed by Richard Buxton to get some macro input on there. And they have regular discussions about how they should be tilting the portfolio in terms of sectors, etc. So,
and to have that decade-long experience there is quite important in smaller caps in particular, because smaller caps is a secular asset class. You know, we have had over the last 5-6 years since the global recession, they've gone in and out of favour a couple of times, but now we've got domestic growth in the UK, and if you're feeling positive about the GDP outlook for the UK, smaller caps, which tend to be more domestically focused, are an area that we can do well. So to have that decade-long experience, to have that big team, it bodes well.
I think this experience has led him down the path of trying to create a more balanced portfolio. He has got a tilt towards domestic cyclicals, but he's also got an almost the same kind of weight in secular sort of long-term growth stories. So that balanced profile kind of leads to a sort of more consistent return profile, which we like.
And what's the second fund today?
We're going to talk about the Schroder UK Dynamic Smaller Companies Fund run by Paul Marriage. Paul's a pretty experienced smaller cap manager himself. He's got about 12 years.
Ex-Cas fund, of course.
Former Casino fund. He joined, he's got some decent support there. John Warren is co-manager, and also an analyst supporting them, so plenty of resource there. He's been pretty consistent with his approach. He has got this core of quality, market-leading type companies, solid companies, but then he'll use 20% of the portfolio to go into more shorter-term value type opportunities. Does tend to favour the micro caps quite a lot, so it's important that you keep a close tabs on how much he's running in total, so that you can continue to access those kind of micro caps. Last year was an interesting year for the fund. I mean, they actually had a lot of inflows. The fund got to 1.3 billion in size before they then closed it. They saw outflows as a result. It's now back to around 500 million, and that's quite a good amount of money in our view to be able to manage the portfolio effectively.
And did that hurt the fund? Because smaller caps aren't exactly the most liquid. It's not like he was pulling money in and out of the top 20 in the FTSE 100. This is a difficult style of investment to manage liquidity at the best times, let alone when your fund is tripling in size and then, you know, a third of the size.
Sure. I mean, smaller companies, managers tend to like to run their winners, but then there's a bit more of a temptation to perhaps run those winners longer than you may have done otherwise if you've always got those inflows and a big fund, and it gets a bit more problematic recycling ideas. So, yeah, I don't think the flows helped, but there were some stock-specific issues as well, some profit warnings amongst some of his larger positions. So it was almost a perfect storm for him last year, but he's come back very strongly this year. He's amongst the best performers in the peer group. We've kept faith with him, and it's looking a much brighter picture this year.
And what's the third and final fund?
The final fund's the Templeton UK Fund, also a very strong performer this year. This is a Leeds-based team of managers who have a collaborative kind of approach. Richard Bullis and Paul Spencer have co-managed this for just over 3 years now. They revamped the process when they took it over.
Really strong team there in Leeds, haven't they? Because they've got Colin Morton on there, that sort as well.
Strong team. I often think there's a bit of an advantage as well to sort of being out of London and in some respects away from the noise, etc. It gives you a slightly different perspective on things, and I think that Leeds-based team kind of has that advantage. Paul Spencer, very experienced small and mid-cap manager, and it's his approach that they adopted for the small cap fund. He trained up Richard Bullis. It's a good, solid approach. They buy established businesses.
So not so much the micro cap, like the one we were talking about earlier. These are they are smaller companies, but perhaps names you would have heard of.
Yeah, established business models, and cash generation is pretty key to them. And you'll see the average market cap of their portfolio is a bit larger than Paul Marriage's fund. So built a nice 3-year track record and having a very strong year this year. So it's coming together nicely. 3
quite different funds there.
Yep.
Daniel, thank you very much.
Pleasure.
This is Emma Wall from Morningstar. Thank you for watching.